I'm Matthew Williams, founder of Williams & Associates Wealth Stewardship at Richardson Wealth, a wealth advisory practice based in Toronto and southeastern Ontario. John Bogle, the godfather of index investing, spent his career making a key argument that costs compound against you the way that returns compound for you. He was right, but he also wrote something that gets far less attention, that financial innovation left unchecked produces speculation more than investing at times. I sat down with Prerna Mathews. She helped build ETFs at Vanguard Canada and now leads product innovation at Mackenzie Investments. She also chairs the Canadian ETF Association, and we dig into whether we as an industry for clients have won the fee battle and properly reduced costs effectively for client benefit, what regulation completes, and the harder questions that not many people want to own or discuss openly. I walked away from this conversation genuinely energized. And if you're interested in the industry at large, in products, and where things are going, I think you're really going to enjoy this conversation as well. My guest today has spent her career at the center of one of the most significant transformations in Canadian investment history. She led ETF product development at Vanguard Canada and now leads product innovation at Mackenzie Investments and serves as the vice chair of the Canadian ETF Association, which means she's seen the story from essentially every angle. Prerna Mathews, welcome. Would you please take a moment just to introduce yourself to the viewer, some of your background, and what you're working on today?
Yeah, great. Well, thank you so much for having me on your podcast. I appreciate the opportunity. And as you've just mentioned, I love to talk about ETFs. I love to build ETFs, love to talk about it, and have been for many, many years with advisors across the country. It has become a very important vehicle for investing here in Canada. One in $4 or 25 cents of every dollar is essentially going into ETFs today here in Canada. ETFs are increasingly becoming the vehicle of choice. And so ensuring that investors are really deepening their understanding and knowledge of the product structure, what you can find in the ETF market, what you might be hearing from your advisors. This is really important. And so I'm always happy to have this discussion and really look forward to unpacking all of the great topics within the ETF world today with you.
Great. And so, so of course, ETFs were a wonderful innovation, often, motivated by John Bogle, and we'll talk about that in a moment. But, it does sort of then highlight the landscape that we're in today in terms of costs and fees and so on and so forth. And you've had a front row seat to how dramatically this industry has changed. You were at Vanguard when low cost investing was still probably a genuinely radical idea in Canada. When you look at where costs and fees are actually today compared to, call it a decade or longer ago, what does that picture look like?
Yeah, it's certainly been transformative, the marketplace generally here in Canada. But we can't talk about fees falling or dropping alone without sort of the broader context of what's pushing that forward. Certainly, the entry of many ETF providers, including Vanguard, helped create more product and ultimately more competition in the marketplace, right? And that is always a win for investors. And so we did see, a meaningful drive toward products being offered in the marketplace that really weren't that prevalent, like passive investing generally you would find in select mutual fund families or vehicles, and that too, there wasn't a lot of price competition to be had per se in the Canadian market. So, there's what we've seen change in the past decade really comes down to three key things. We have seen certainly compression at the product level, right? So this is, investors are better understanding what the cost of beta should be, and ultimately what is the value you should be expecting out of your active manager, right? So this understanding of like value for money is becoming and has become over the past decade a much more meaningful conversation. You've also seen more unbundling occur, right? And this is very much in your world in terms of advice versus product. this unbundling of the alpha that the advisor is adding for a client, and what an investor is expecting out of the product itself. And you're seeing then a greater dispersion as well of like the expectations out of beta and what you should be paying for out of alpha. Your expectations are going up effectively of what you see from the fee that you pay or want to see from the fee that you pay. So I think it's important that we lay all of that out, because that is all contributing to an environment that provides ultimately advisors and investors a lot more choice in how you build portfolios for the needs that you have, that you can really tailor something that is very personalized, inclusive of your fee budget, your risk budget. So all of these great things have happened because of just the evolution of the ETF marketplace. They're vehicles that can be very niche, and they're vehicles that can provide very broad exposure, but lots of choice, lots of availability of product across different fee ranges have enabled both advisors and investors to more effectively save for their futures.
Yes, I mean that's you've hit on so many great points there that we'll touch on as well throughout some of the other questions. And but that one that really resonates with me is that point around the you know fee budget type of thing for products that we put into client portfolio, right? It's like, if we want the way that I think about it when I'm allocating or selecting a solution, it's just to get the market return or all of the attributes of the market return, market volatility, or whatever aspect that you're looking for is close to free at this point in time, right? So, it's if you're going to then pay any premium to that, you're looking for aspects that the market isn't delivering or is overpriced in, and so on and so forth. So it makes some of those decisions much more clear from that perspective.
Yeah, and I think, it goes hand in hand. We will, of course, I'm sure, unpack all of the regulations that are also driving a lot of change in our industry, but it goes in hand with that client expectation of like, I just want to know more. I want to know more about what's happening in my portfolio. I want to know more about what my advisor is doing for me. And a lot of the demographic shifts are very much aligned to that, right? Younger investors tend to have a far more vested interest in that level of transparency and understanding than older generations do, right? We know millennials and Gen Z predominantly are leaning in online, and they're themselves trying to educate themselves. Even in the engagement with their advisor, they're asking far deeper questions, and they're far more fee aware as a result, because as you've noted, this sort of beta is free effectively. So anything else I'm paying for had better deliver me a meaningful return in the portfolio for that fee.
Yeah, absolutely, absolutely. And so that does kind of dovetail right into sort of my next question, which is maybe maybe a counterintuitive thing for someone to say, but it's really around giving the industry its due, right? Like, I think the industry does deserve some real credit here that it often doesn't get. I mean, I think there's a lot of things to criticize the industry on, but I think some of these things, changes with DSCs, these client reform measures, of which we're now in the next iteration of it, the ETF revolution that we sort of spoke about there, active managers being forced to compete on costs. Now that's just my view, but Nick, how much, in your view, how much has genuinely changed, and does the industry get enough acknowledgement?
Yeah, I don't think so. I mean, you've noted just how much has changed for advisors and just generally for the wealth and asset management industries in Canada. And I think what most people will very quickly jump to is, well, what's next? What else should be fixed? Where else do we need reform? And very little, if any, thought is given to how did we get here and what has that journey looked like, especially in the past decade. And so yeah, just with the amount of choice today of products. So I talked about the good side of that and the benefits of having lots of choice, but the downside to that is it is even more complex today for the average investor to understand how to navigate not just the markets, but any products that achieve the outcome or access to those markets. And So amidst all of that, you've got lots of all of these reforms that are for the benefit, certainly, of investors. Transparency, more accountability measures that have shown up in CRM2, CRM3, and have put a tremendous amount of pressure on the entire industry to sort of evolve how we're communicating, what we are delivering. But all of that while also navigating the complexities of investing today. It is far more complex to derive the same level of yield today as it was 20 years ago, or return expectations for the next decade look far lower than they did for the past decade. And so it's definitely, I think it's a good call out that not only is it just the evolution of this relationship between advisor and investor that has evolved so significantly over the past decade, but also the work that an advisor is doing today is far more complex in helping investors navigate the realities of investing.
Yes, yeah, absolutely. I guess, as costs come, like I guess like any industry, right? Like, and as costs come down, as margins contract, th those who want to participate have to continue to find ways to add additional value in whichever way, aligns with what they believe in and what will attract, what their clients like and so on and so forth. And I think, it's just as I sit today and I look at the diversity of various advisory businesses, and then I think of kind of the way that I'm looking to approach it, I think clients have a lot of choice, not only in product, but advisor type, right? In terms of what
Yeah.
that person's looking to deliver and what that value means to them.
Definitely. It's not homogenous, right? Just as it is you looking for an asset manager, an ETF provider to partner with, those relationships are not homogenous. And so, yeah, it's the same thing we think about even from an ETF strategy perspective. How I've seen sort of the industry develop as well, and where firms stand out versus others. Obviously, performance and delivering great outcomes in investment solutions is number one. But there is so much more that we as partners should be doing with you as well. At least we believe at Mackenzie, but to support how you're engaging with clients. So yeah, it's very true, and I think it has been needed as well. Like, to be fair, we don't get our due respect for all the work that we've done as an industry collectively, but it has also been a long time coming, and so I'm really excited to see how we've continued to evolve in all of the right ways here, both in wealth and asset management in Canada.
Yes, that's great. And so my next question, I guess, comes back a little bit to the regulation. Of course, we have Client Reform 3 coming up now, which is further transparency on underlying and embedded costs. Now, CRM3 does feel a bit to me, or maybe it should feel a bit like the end of a chapter rather than a start. Like, I believe, I think we've, and I'd love to get your view here. I feel like we've essentially won the fee transparency battle for the most part. Like, I mean, do you agree, or do you think that there is meaningful unfinished business on
Yeah.
transparency as it relates to these costs?
We've come a long way, and we are putting together information to clients more than most countries in the world. So I've spent a lot of time looking at, what fee transparency looks like in different geographies, and even this notion of putting your, MER plus your trading expenses in a total number doesn't actually meaningfully exist in any large geography in the world. So we're a little bit unique in that regard. So definitely higher transparency and data that obviously existed already in regulatory documents that we're just putting together. But that data doesn't actually exist consistently in regulatory documents around the world. So I think most investors don't realize that. So I think even some understanding of how does this look versus other markets surprises many people when I say that, right? That actually we have a lot of great transparency. So, if you're feeling like, how does this look, or are we playing catch up? I think we're kind of leading, not catching up. And so it's nice to, I think, at least reflect that to clients as they're kind of thinking about, well, there should be more, or are we done yet? But also, what does it mean? So that's great. We have now, we're going to have very clear um, information in front of clients on a much regular basis of what is the cost of every element of what we deliver to them. but what does that mean? And I think that that is actually a bigger question, and so much of that, in fact, rests on the advisor, right? It doesn't, there's only so much that we as an asset manager could do in communicating that, but really that rests with the advisor. And you know, helping clients really navigate the translation of those numbers to what that means in the outcome of the portfolio, to me feels like the bigger lift ahead for many advisors. I mean, there's many advisors that have tried to get ahead of it, which is great. I believe there's also many advisors who haven't. And so to your earlier point of homogeneity and lack thereof in advisors, I think that's very true. But, investors shouldn't just be asking for the data. They should be asking for, what does this mean? Right? Tell me, what does that mean? So I know the fees I've paid. Help me better understand what that means in the growth of my portfolio. Why have you positioned me in this way? Why is this going to help me to meet my goals, whether short term or long term? I think that that's not a closed chapter in my mind. Like, and it's nothing to do with the actual regulations and reform. It's very much to do with that relationship between the advisor and investor.
Yes, that's such a great point. And what does that mean is, I think often I use and it's not the cleanest, but I keep trying to use it. One day it'll be very clean, but it's the idea that, we can be akin to somebody doing like a luxury renovation on a house, right? And at some point in time, like, if I'm given just, the margin on all of the lumber products that's going into the flooring, at some point I don't really care, right? I have a budget, and it's like, okay, well, why are you choosing this over this? Like, is this going to look better? Is it going to age better? So on and so forth. And if it costs more, then great. Although if this other thing is just a commodity piece, then yes, let's spend very little on it. And so I think that your point there really kind of hit the nail on the head for me.
Yeah, I think that that is going to be a very frequently asked question of investors moving forward. It's great data. Now what do I do with it?
Right, exactly. And so, one of my whys for sort of having my own sort of practice, and one of my large motivators was this book by John Bogle
Oh,
called
yes.
Enough,
Yeah.
and and in there, I mean, he speaks about a whole bunch of ills of the industry that he had seen back at that point in time. So, so I encourage people to read it. And so I think pretty unequivocally he was right about costs, right? Costs are too high. Um, but I believe it's chapter 2. Yeah, he speaks about one of the title of the chapter, I believe, is Too Much Speculation, Not Enough Investment. And his concern was that financial innovation produces complexity that most people can't navigate. And you touched on this earlier in one of the questions, that there's now so many products and
Yeah.
so much. And so, in your view, has the product explosion that this transparency has enabled either made that problem around speculation worse, or how would you sort of think about, is there a connection between those two things that you see?
Yeah, I was fortunate to have met John Bogle a few times at my during my time at Vanguard, and heard him speak a few times, and it was very enlightening, just to hear his perspectives for, bringing his books to life effectively, and kind of seeing that evolve in front of our eyes. Definitely, he was right about many things. He was also not right about many things. I mean, he didn't really believe that the ETF vehicle um, should have grown. He really very much saw the ETF vehicle, for example, as an institutional product, which is really what it was in the early days in the US. And he firmly believed that that was actually going to get in the way, as you noted, of the average investor being successful in investing. So it's quite ironic that, today his firm is now, one of the largest ETF providers in the world. And so an example of where, that tension certainly exists even still at Vanguard, with their legacy and history. But no doubt at the root of it, he was really speaking to democratizing of investing, right? And we've seen that occur obviously in passive, but well beyond, right? We've seen that occur in liquid alternative strategies. We've seen that in asset classes that have been able to be more accessible to the average investor that otherwise, even a decade ago, would have been very hard to invest in without a significant amount of money set aside and a lot of paperwork to jump through, right? So democratization of investing, the ability to give you the ability to grow your capital in the same way as the wealthiest and the most powerful, we've got to call that out, right? So that is definitely a positive. But and this is ironic coming from somebody that builds products for a living. There can also be too much, and there can also be too many things that don't always make a lot of sense for the masses. And so this sort of balance of trying to figure out where how you use the products, the choice available to you can be useful versus where you might start to get distracted with things that are maybe built for a much smaller audience or niche investment segment is this challenge that investors face today. And I don't know if all investors in the marketplace are going to be able to effectively navigate that.
Right.
And we might be seeing that tested in a far more meaningful way in the next 12 to 18 months in markets. And so it'll be interesting to see how that works out, works its way through the system, particularly in the do-it-yourself segment. Where you tend to see the wildest product selection occurring, right? So this is not just because you've got single stock ETFs or you've got 3x levered, 4x levered products now in the US, or prediction market ETFs that are in filing with the SEC. Doesn't mean that advisors are rushing out the door to add it, right? So most advisors, I believe, in Canada are navigating the ETF market uh, in the same fashion of due diligence as they would anything else, right? That just because things are in ETFs doesn't mean that you forego all of the great work that you would have otherwise done to understand an investment strategy, the manager, what you're expecting for a client out of it. And so I believe most advisors in Canada are actually very much still using that mindset as they look to the ETF market. But there are, you know, probably a small group of advisors and certainly in the DIY channel investors that are looking at the ETF space and going, well, that sounds exciting. I want more of that. SpaceX in an ETF, immediately add, and so
Right.
we're going to start to see, unfortunately, cracks as a result of that. And it's going to be these smaller segments, these nichier pockets within the ETF market where there's been product proliferation for the sake of it, to be honest. And and it's going to hurt for some, unfortunately. There's even been examples of products that have been in the marketplace that are clearly trader tools. For example, they reset daily, and investors have been burned in those over the years to the point that there's been products that have gone to a NAV of $0, right? And investors not fully understanding that they bought a trading vehicle and held onto it longer than a day when that was really what they were meant to be used for. So as I think about how this industry evolves, there's definitely some onus on the investor and the advisor, but also what is the role of the industry? I am thinking a lot about it. It's more of a sort of hypothetical, what does that mean for us issuers and how we put product out, and what is our responsibility in helping investors and advisors understand how to use what is available on the shelf? And I have no doubt the regulator will continue to think about this. I mean, they are effectively in Canada at this point, with the US market starting to see more meaningful divergence between Canada and the US, and the fact that Canadians can often very easily buy US listed ETFs, but there are products now in the US ETF market that would not be approved by a Canadian regulator. And so the Canadian regulator is now really spending a lot of time thinking about, what does that mean? What does that mean for
Right.
investor protection? If we wouldn't have signed off on launching something like that here in Canada, do we feel comfortable if a Canadian investor buys that outside of our boundaries?
Right. Right. Yeah. I mean, yeah, very, that I hadn't even really thought of that. That's really interesting as sort of the globalization of trading, you know, becomes more available. Yeah, there's these other factors that come into play that can be quite meaningful for, the regulatory regime of a country and obviously the end investor type of thing, right? Because I guess if there's different types of products available in the US, the investor education around those products are going to be much more developed than they would be in Canada, where it doesn't exist, or it's not, it wouldn't have passed our regulatory view from that perspective. It's really interesting.
Right. So you're sort of seeing this in just trade policy divergence, right? Similarly to the divergence we've seen there. Uh, from a regulation perspective, you're also seeing regulators taking very different stances on what they approve into their local markets. So this is becoming a bigger problem, not just in trade, like I said, but even in investment solutions, where the Canadian regulators are definitely thinking about, like, it, should we approve similar things than in Canada, or do we need to rethink that access ultimately for what investors are buying out of the US?
Yeah. Wow. Great insight for how to think what the future is going to hold in store for where the regulation and stuff may go to protect investors. It's really interesting, and really that actually kind of drives right into it's a nice segue into the next sort of question that I had, which is around what are advisors actually for, right? But we've actually now touched on in each of these questions a number of these kind of thorny questions that you know if I'm an individual who's not in the industry, do I want to spend all my time sort of going through and figuring out all of these small nuances, or do I want to, work with a professional on that? So that's kind of the open piece there. But, if the fee and cost battle is largely won and there's going to be maybe marginal victories from here forward, and of course we spoke about the speculation piece. Um, what does that kind of leave advisors for? I mean, my personal view is that one of the key roles of an advisor is around education, helping clients understand what they own and why, even philosophically think about investments and you know speculation and all that stuff, and the ways to kind of manage wealth and compound over time. But does that resonate, or is there anything else
Yeah,
that you disagree with? Yeah.
I I go back to my earlier comment that the toolkit to deliver an expected outcome, uh, even for a client themselves, has to be more complex today than it has ever been. It doesn't really matter whether your outcome is yield or your outcome is capital appreciation and growth of your portfolio. You can't do it buying the same set of tools that you would have relied on 20 years ago, 10 years ago. And you might also not be able to do it just holding that basket steady completely for the next whatever your time horizon is of investing. So to your comment about, how much time do you want to invest as an investor who might not be in the industry, certainly, to learn about how to do that effectively. I think it's far more complex today. And it's not just for the sake of saying it, but you can see it around the world. You can see it in the levels of volatility on a weekly basis, trying to understand when to buy or sell, when to hold, where to move to, what might be appropriate for the portfolio in the next near to midterm. This is where I think the advisor has a really continued great opportunity to partner with investors and helping them through that education, right? And it's not something that you can just learn once. Like it's not like you can just take a course and say, well, I know what I need to know, and I got it figured out. It's sort of it is a journey because the markets are evolving and they're evolving very differently. We like to say history repeats itself. Like we aren't really seeing that in the short term. And when will we see that again? And I'm not sure a book can help you or a course can help you figure that out, right? And so this is where I think this partnership between advisors and investors is going to be really important. And I don't think we're at the end of product innovation in our industry. In fact, I think, I have some wild thoughts about even the ETF structure and whether the ETF structure is the be all end all, right?
Okay.
And so what does that mean for how investors access ownership? That's at the end of the day what this is. This is a journey of ownership. right? Whether it's mutual funds, then ETFs, private assets. These are conversations about ownership and the ability to increase our wealth through ownership. And I still think there is a lot more to come in probably more rapid evolution that we've seen even from mutual fund to ETF. And so that makes the case even further for, having a partner who can help you understand that, navigate that, cut the noise out, because there is undoubtedly a lot of noise in the world today. And that includes in the number of products that we continue to see launched. Do I need this new ETF? And this one sounds the same as that one, but do they actually deliver the same thing? And also, just because an ETF is cheap doesn't mean that it's the right fit for your portfolio. And so a lot of this noise as well, I think advisors are going to play a very meaningful role in helping manage for that moving forward.
Yes, absolutely. And you stole a bit of the thunder of the next question of like where the conversation goes next. So where there might be gaps or
Yeah.
thoughts around product design and so on and so forth. I don't know if you wanted to take a moment to expand on maybe some
Yeah,
of
for
those thoughts
sure.
that you were touching on there,
Definitely.
but
I
yeah.
only teased it there. But yeah, I think, if we just think about even investing strategies that are available today, um, I think you're going to see a continued offering of institutional like mandates to the retail investor. And it again goes back to the comment I've been making a lot today is around the need for more complex solutions to deliver the outcomes we expect. It's going to take more tools in our toolkit to do that. And so but what you will see the industry do is package that in ways that is going to be far easier for an investor to be able to, or advisor to be able to incorporate into the portfolio, right? So I think liquid alternatives as a category will be a much more meaningful conversation moving forward. And liquid alts doesn't always mean complex. Like it could have lots of different levers and tools and things inside, but it's ultimately trying to achieve, there's a few things that investors often need. They need, some defensive positioning, perhaps. Maybe they need yield, maybe they need growth, but I think liquid alts will play a bigger role. We spend a lot of time here, not in the context of ETFs, but talking about private assets. We believe that that's going to play a bigger role for wealthier Canadians to be able to meaningfully grow their portfolios moving forward. And I think you're going to see this rise of like strategic beta 2.0. Um, I think gone are the days of index tracking strategic beta. Um, I think index tracking works in the market context, market beta context, and that's about it. I think that the pace at which the world is changing and evolving, those rules don't keep up. And that's a problem for investors, and also a reason why many advisors have not necessarily gravitated to those types of products in a meaningful way over the years. They're just built poorly, frankly. And I think that there is going to be more choice on offer in those kinds of products as well. I mean, we've seen this just across the investing spectrum, right? It's not just about beta passive and fundamental stock picking active. You've seen the growth of quant as an investment solution for investors. Certainly, Mackenzie has been a big part of that with our quantitative equity team. You'll see the rise of systematic mandates. So these are effectively rules-based, but they're rules-based that can change. Like it's not set within an index. This is a manager who is taking at least a look on some frequency to say, does this still apply in how markets are behaving and expected to behave, but delivering that in a way that is more transparent than like fundamental stock picking. So it's not just somebody saying, I really like this stock because. So there's a little bit more transparency for the advisor to understand what's happening, but there's a certain degree of activeness to it, right? It's not
Right.
just blindly following a strategic beta index. So I think you're going to see more evolution of these exposures. And I, again, align this a lot to institutional style investing becoming more available to more owners of stock and capital, right? Which is a good
Right.
thing. Democratization is a good thing. It means wealth can increase across a broader group of investors in this country. And then lastly, won't spend too much time on this, but I spend a lot of time thinking about this, is tokenization. And it is a buzzword in some ways, but I believe it will be far more than a buzzword in the coming future. The ability to take potentially a building and be able to own it in the form of a share has never meaningfully happened in our history, quite like what tokenization may allow us to do. So
Right.
just giving you one very physical example there, but there are, I mean, we could unpack that in a whole other conversation, but I think that, as we think about what ultimately investors are going to expect out of advisors as well, I think ultimate personalization is going to be it, right? It's not just that, Matthew, you're telling me what I need at my age range and my risk level and what my goals are, but you're also understanding far more than that about me and what makes me tick and what makes me interested, and personalizing an investment portfolio that better aligns to who I am, such that I feel like this is very representative of what I believe in the world. And I think advisors have been able to achieve far more personalization today with the tools available in the ETF market, but I don't think we've seen even the extent to which advisors are going to be able to personalize moving forward. So I actually have a very big perspective on that, and how products would need to evolve to support that.
Wow, that's I'd love to, yeah, as that becomes, more on the front of, I guess the innovator's mind. I'd love to talk to you more about that as well. It's super interesting stuff there as you when you dig into that. This has been super energizing. Just so my last question is a bit more of a personal one, and it's just I'm going to start asking people. As you can see, I'm a avid I'm a voracious reader. I can't digest enough books and information. Is there any book you'd recommend to the audience, or anything you've been following lately that you'd like to shout out?
Yeah, absolutely. I won't suggest a Bogle book, although I've many on my bookshelf, and you've already given Bogle a call out. But I will put forward what I think is a bit of an underrated book. I don't hear too many people talking about it, but it's a book called Capital Returns, and it's by Edward Chancellor, and it's a really great book that unpacks, like, beyond the concept of stock picking, right? Really understanding market cycles, what incents companies, why you can potentially see very divergent behavior in sectors out of what seem to be similar looking companies. And so I think that perspective of just the underlying mechanics was a very eye-opening book for me. It really helped me kind of as I continue to think about how do you build the right solutions for investors. That was one that I always recommend is Capital Returns.
That's such a good one. Oh, thank you very much for calling that one out. That's I'm really glad that that's caught on video and I can send that out to clients. That's great. Well, Prerna, thank you so much. This has been such a genuinely great conversation. I'm quite energized by it, and thank you for your time and honesty. And also, I'll say just before I kind of turn over to one last time here, it was a great call out on the Mackenzie team. I mean, Mackenzie, you guys are very innovative with, the alternative solutions, the private solutions, your quant team. There's a number of, amazing portfolio managers and products that exist over at your firm. And so I wanted to just kind of make sure I double clicked on that point that you raised before. And so before I let you go there, is there anything at Mackenzie you'd like to point viewers to, resources, content, or anything that you think might be useful?
Yeah, and thank you for that call out. We have now been in the ETF industry in Canada for 10 years. We just celebrated our 10 years in April. And I strongly believe that we are, we're not innovating for the sake of innovating. We're not launching for the sake of launching. We have really been trying to deliver meaningful solutions, differentiated solutions, whether equity, as you pointed out, with our global quantitative equity team and a variety of solutions there, including in spaces where there haven't been a lot on offer. International equity, it being an area where all of a sudden in the past two years, we've seen a significant resurgence of interest because of valuations and opportunities in the market. And MIQE is one of our ETFs on offer from that suite. But yes, also, like I said, liquid alts, private assets, we're thinking very much about how to deliver the complex in a simpler way for investors at large in Canada. So we've got plenty of resources on not just products, but also markets on our insights section on our website. We do also have a podcast and talk about all sorts of topics from products and PMs at Mackenzie to just broader industry conversations around the price of oil and where is the housing market headed and so on. So lots of great learnings there as well.
That's great. Well, thank you so much. I appreciate it. And you're welcome anytime. I love this conversation.
Thanks very much.